Good afternoon. This is Tony Cherniawski, President of the Practical Investor LLC. Today is November the 5th, 2008. The name of the program is Election Remorse in the Market. Is it any surprise to you that the market sold off today? It certainly wasn't to me. If you had watched my video last Sunday or any time after called Presidential Elections in the Market, I mentioned that the markets do funny things. Number one, markets make presidents. It's not the other way around. The second thing is we were looking at a very contrived market going into the election, and I said that we had the potential for at least one more rally up to election day. In fact, I put the targets on there on that video, and the targets were 96.50 on the Dow, 1385 on the NASDAQ, and 1010 on the Standard & Poor's. Lo and behold, the Dow went to 96.53, the NASDAQ went to 1382, and the Standard & Poor's went to 1007. Not bad, 3 points off on each one. The point is that that ended the rally, despite the fact that CNBC and all the other pundits are just calling for, buy, buy, buy. This is the time to get into the market. Don't let it get away from you, etc., etc. It is now too late. They have completely misread what happened with the market, and now we're going back into something entirely unexpected for most investors, a decline. Now, why am I saying that? There's a couple of reasons. Number one, remember I have a model that tells me where the tops are. It looked pretty good to me right there when we hit within 3 points. The other thing is that the cycles tell me that this decline isn't over. So please understand, we still have weeks to go, probably even more than a month before we see the end of this declining market. The third thing is that the formations in the market actually have not been totally negated. So let's take a look at them for a minute. And here we are with the NASDAQ rather, showing a bearish wedge, having been broken this morning to the downside pretty decisively. So in other words, bearish wedge gives us the potential that we could see the NASDAQ, believe it or not, go down somewhere plus or minus 15 points of 950. Is that amazing? Not really. What we're seeing is a resumption of the bear market, and that would be a normal target for a decline at this point. If we look at the industrials, we see that the bearish pennant morphed into a bearish wedge. So in other words, one bear followed the other. This thing, it's so hard to tell which one of these is going to apply, so I left both of the numbers on. The bearish wedge has a normal target range of about 7,000 to 7,250, and it could extend even lower. Well, then let's take a look at the target. The potential pennant target is below 6,000. So take your pick. It looks pretty bearish to me. So what's going on here? Remember I said that the market looked contrived, even manipulated. I believe that there was a good reason to stop the market from going down below the 2002 lows. By the way, those were earlier targets that I'd had for virtually all the indexes. So right now, the realization that came in October for most investors is that we might be retracing the 2002 lows. Not a bad conclusion. Now everybody's breathing a sigh of relief because we didn't get there. We stopped short of declining below the 2002 lows, and we have a nice little rally right up to election day. Odd, isn't it? Well, the point is that we do have a resumption of the bear market ahead of us. Neither of those formations have been negated in any way. In fact, maybe they've been reinforced. Who knows? The point is that this election year rally in the market may have been nothing more than a contrived way to keep people's minds off the economy and the markets. Did they succeed? Hardly. All the pundits on election day were talking about it. They were saying, McCain had the upper hand when they were talking about the Iraq war. Obama didn't look so good then. People weren't in agreement with him. On the other hand, McCain didn't change tactics when the economy started coming ahead. That's too bad. But the point here is that's now over. We have a new president, and what happens next? I would suggest that this withdrawal of funds out of the market now that were put in there to keep the market looking at least, if not healthy, at least on the road to recovery. Those funds that were used to do that will probably be withdrawn. In other words, I believe that the Presidential Committee on the Financial Markets is probably going to leave a scorched earth behind it. And we should see quite a considerably lower decline in virtually all the indexes, and in fact, throughout the world. So keep that in mind. I don't want to be a perma-bear. I'd like to be in touch with you folks and tell you when it's time for the market to go back up again. But right now, buyer beware. Just be very, very careful with this market. We've got plenty of room on the downside. If I'm wrong, I'll be the first to tell you. But in the meantime, please do the right thing and be very careful. By the way, you can reach me at tonyc@thepracticalinvestor.com, and my website is thepracticalinvestor.com. Please keep in touch, and if I can help you in any way, I'll be glad to respond as quickly as I can.